last but not the least is MACRS, Modified Accelerated Cost Recovery System. It's very, I think, basic, but it just gets tweaked by the fact that you can have accelerated depreciation. So we'll talk about the one general depreciation system, which is a default depreciation system in MACRS, and it's kind of favorable for the SSC. It has bifurcated between two. It says if you're having a personal property, they will have some other set of rules and regulations. If you have a real property, some other set of rules and regulations. Let's talk about personal first. It says you can follow personal property in that you can follow a declining method where you can have accelerated depreciation of 200% on the assets having useful life up to 10 years, 150% on those assets which are having useful life more than 10 years. So broadly, there are two buckets, which is of 15 year and 20 years, where you can apply 150% accelerated. What is the convention? Suppose I bought an asset in the month of May, which is the fifth month of the calendar year. But the method says that you have to follow half year convention, which means it will be assumed you bought in middle of the year. Had it been I bought the asset in November, still I'll be able to claim depreciation starting half of the year. It can be a chance that the business had started to acquire assets mostly in the end of the year. So in this, we will evaluate if the total asset grid is purchased or almost 40% or more of the purchase is made in quarter four. In that case, we can say that it should follow mid-quarter convention. Suppose during the whole year, I bought assets worth $1 million, but out of those $1 million, almost $500,000 worth of assets were bought in quarter four. So it says that I bought assets which is more than 40% of the total purchase in quarter four. So I'll be following mid-quarter convention for those assets bought in the later part of the year. But for the others, I can follow half-year convention. I hope that makes sense. Recovery period is nothing but the useful life. For special tools, 3 years, computer automotive 5 year, office furniture and fixture 7 year, vessel 10 year, telephone distribution plant 15 years, and sewer pipes 20 years. It's as in front of you, and you can see and figure out how and what I'm actually talking about. Let's talk about real property. Real property is quite straightforward. It says if it is a real property, you can claim depreciation using straight line method. There is no double declining or 150% declining method. It follows mid-month convention. Mid-month convention means that irrespective of when you buy in the year, we'll see that which month you bought and we'll assume it is bought in the middle of the month. The recovery period for residential rental property. So SSC acquired for the purpose of rentals, and the residential rental property is there. So in case our useful life will be 27.5 years. In case of non-residential rental property, maybe the SSC, the company, the corporate which we are talking about acquired office space to rent out, like WeWork. So these guys will have 39 years of useful life over the period, and they will claim depreciation using mid-month convention via straight line method. I think I talked about alternative depreciation system, and this is general depreciation. So what is alternative? Let's get on that. Alternative depreciation is quite similar, but just not exactly same as general depreciation. What does that mean? It allows straight line method of depreciation, but the recovery period of alternative is comparatively longer than the general depreciation. For example, in case of office furniture and fixtures, in general depreciation system, we had 7 years, but in case of alternative depreciation system, we have 10 years. Mind it, in a situation where we are following alternative depreciation system, we do not get the bonus depreciation. Whereas if we are following general depreciation system, we have the option to follow or opt in for bonus depreciation. Again, this is optional in nature. You may or may not follow alternative depreciation system, but it becomes mandatory if you fall in any of the below. That is, if you have listed property which you use less than 50% in the business. So suppose if I bought some equipment, but I use it more for my personal work. Or maybe I bought a car. I don't use it much for the business, but my wife uses for her personal purpose. So in this case, I may not be able to use that in general depreciation. I'll use alternative depreciation by mandatory. Maybe the property is predominantly located outside the United States. Oh, so in that case, again, I cannot follow general depreciation system. I'll follow alternative depreciation system. Or maybe I bought a tax exempt property. With this, I think we are familiarized and understood with the depreciation as per the US tax laws. And I hope this makes more sense and you're getting a wider visibility of the topic. Just to add one last thing, with all these depreciations, we file a form called 4562, which talks about the depreciations that we have claimed across various options. So, what is in 179, what is in bonus, what is in MACRS depreciation. And this becomes an annexure to our Form 1120, talking about a SSE, who is a corporation. Thank you so much, everyone. I really appreciate if you have watched till now, and my best wishes for the ones who are excelling in their professional journey. Please like, share, and subscribe to my channel, and kindly spread the word to the people who you consider may find these videos useful. And looking forward to have you again on Learning Lane with Paris.